The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. So we're going to start out the show looking at the German DAX, and as you can see, we've gone up to the 78% level again. We've gone a tiny bit above it, not valid breakout. You really need to get about 100 DAX points above it for valid breakouts. So, we're having some more here from our good friend Bill Meridian. It's February, us that we are going to probably have to change his mind and my mind and everybody else's mind if the market is up the first 2 days of this week. He's going to get it through, and if it's up on closes higher again on Valentine's Day, then he would say he's done something wrong and the cycle is either inverted or certainly totally wrong, but I agree with him 100%. The one thing I do know, folks, is this is how markets begin. Let's just I have to cover something from one of our listeners asked me to. It's from the Elliott Way, folks. It's about auto loans, and it basically shows that it's on the amount of money that they borrowed to buy cars, and that's at $1.1 trillion now. I've always felt that the real problem in the market is not going to be in the stock market. There's going to be more money lost in the bond market than in the stock market, because the quantitative easing that the Federal Reserve has done over the last 7 years, I don't believe is economically correct, but the market thinks it is right now. So keep in mind that that's something that I think could be happening, down the road. Let's just switch over here to the stock market, because there's an interesting situation going on here in the Dow Jones E-mini. I wanted to bring this to your attention, and believe me, this is my opinion, folks. It's not etched in stone or anything, but if we look at the Dow Jones E-mini, you'll notice that we got up to this level of 20,227. We've got as high as 20,282 so far this morning. We've got a butterfly pattern up at that area. But the most important thing is, if you'll look at the little red box down at the bottom of the page, where it says open interest has dropped in the Dow E-mini and the NASDAQ the last 2 days on this big run-up. Folks, that is bearish action. When open interest drops and prices are rising, that means short covering. Once the short covering is over, there's going to be a vacuum in the market. But that might not happen until the end of December. I don't know, but that's usually what happens when you see this. But several days this week, 3 of the 5 days, we had big drops in not big drops, but substantial drops in the Dow Jones E-mini contract. Now remember, that's 1/10 of the S&P. But not increased by as much as you would think. The whole world is now bullish, and by the whole world, I do mean just about everyone. So we'll see. Know that the margin debt is as high as it's been. It's at all time, but all these things don't mean anything if you're in the last stages of a move. And for what folks I do believe is that we are in the last stages of this move. Because the difference is that I can let you buy more and pulling back and letting you buy more. They don't just run away to the upside. One that my good friend Jay Cross was when you have a position and you're concerned why it's not working, is if you would turn the chart upside down and ask whether you would buy it. And if you were selling, you'd turn the chart. In other words, you turn the chart upside down and look at it and see if the pattern verifies, what your position is going to be. You just have to see that all of these patterns that we're looking at. Here's one that we looked at Friday, 210 in the E, but we've actually gone a little bit higher than we're as high as 23.1875 so far. But that's the ABCD pattern. You can see the ratios are there. We could go up and make a 1.618 on the E-mini S&P. That would take it to about 2330. That's certainly possible to do that. Any of these are possible because when you're in a run like this, you just don't know what's going to be with this. So I think that's important to watch. But one of the things that I do look at, I'm just going to show you the sheet right here. This is the open interest for the equity CME, and the way you find this, folks, is you go to www.cme.com, and all you have to do is to and open interest, and it'll get it up. You can see in the equity section there was a $328,000 drop on Friday. So that's a pretty substantial when you're talking about 9 million. So that's neither here nor there, but that's what's happening. Alrighty, let's move on to the gold market, because this is the one that we're having some real interesting things in. I really thought that there was a chance that we're going to get down to this level of the right around the $1,200 per ounce level. I really feel that we have that chance. If you'll give me 1 second, I will put up the chart here and show you why. And give me a second here. Here we got the gold up. All right, here's where we were as of Friday. You see we went down, and then we hit that 382 level at 1222. We then rallied exactly $17, which is 1/2 of the harmonic number in gold. That was at the exact 61% retracement. And now we're down above the 1230 level again. And I think, I think we are. We were about a half hour ago. But we've still got a chance to get down to this 1215 level is what I would like to see. Now, if it gets to that 1215 level, what you'll be doing is you'll be replicating the move that we had during late January. As you can see, where we went down from the 1220 level, we came all the way down to that magical level that we really liked, that 382, which was the 1180 level. We had a lot of things there to tell us to be a buyer, and so you'd want to be looking to buy that back. Now, there's also a possibility that we're not going to get much below 1220. And that's going to be the key to watch, because and if we just do that and then get strong, boy, you've really got to really think about, getting along some gold, because this has got a chance to really have some good legs if it could do it. There's also the outlier event that we could go all the way down to 1166 an ounce over the next 4 or 5 weeks. That's also a possibility. But right now, as it stands, this is a very bullish chart. And all we have to do is to be able to hold that level, and you should be in pretty good shape as far as from the long side. If you can buy it around that $1,200 level, risking about $15, because it's getting pretty volatile over there. So it's pretty interesting to keep an eye on it. We're going to have a break here, and when we come back, I want to go over the currencies, because we're at a very critical level in the dollar, as we've already talked about, and we will go through that again, and we want to cover that, so we want to be able to do that. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And I wanted to give you a little update here on these currencies a little bit. By the way, there are 30 days left in the option that we bought for our trade of the year that has not been working very well. Unfortunately, it's going to lose $1.44, it looks like, and we're going to go down as having a losing trade in the trade of the year because we bought that VIX index about 3 weeks ago, and the option has given back almost all of the premium. We were risking the whole premium because it was only $1.44. Only $1.44. Unfortunately, if you put a lot of them on, that would have made a big difference. But let's take a look here at this euro. What we want to do here is to, you see where we are on the long-term monthly chart. What's interesting about this is if you'll realize that the euro had got down back in 85 before the Eurozone came out. Actually, the euro came out in December the 16th of 1995, and then in 1999 it was officially started to be traded. That's when they issued the currencies and the coins, and I was fortunate enough that I had students in every single Eurozone, and each one of them sent me some of the coins from the so that I could put them in for a little collection for my grandson, and they really are really cool, especially the ones from Italy because they use the things with Leonardo da Vinci and, of course, Michelangelo, the sculptures on those coins. They're very, very beautiful. But if we look at this long-term monthly chart, you'll notice that there's a really strong cycle in there lasting about 15 years from 1985 to 2000 and 2000 to where we are right now. I'm doing it just very, very long-term. But you notice that we're down in this level of 103 and change a few weeks ago. And I was listening to John Logan, and he was saying the one thing that he had on his watch list, and everybody thought he might be crazy, was to look at the euro. Well, that's not so crazy because it's down some major support down in here, folks. If you'll notice, the move from 1995 to 2000 is equal to the one that we've had from 2007 to where we are right now. But any move below 103 would change that, because that means you would be breaking down and heading towards that par level, or even a lot lower. Now, if we take a look at the euro on the weekly basis, and believe me, I don't look at monthly charts very often. Okay, there we go. How could the VIX be positive today with the stock market running to the moon? I don't understand that, but I don't understand a lot of things. All right, let's look at this euro on the weekly basis. As you can see, the ABCD structure, going back over the last 17 years, takes it down to 99. Actually, 98.20 is the actual number that shows up at the 786. Right now, we're trading at 106.30 and change. Actually, a little bit below that right now. But it appears that that's where we could be heading, but we need to get below that 103 level, because that 103 level has some very, very significant support just with the smaller ABCD structure. So this is what we're watching from the euro. But it's better to sell this thing in a downtrend. Remember the 108 level, how important that was. It stopped right on the spot within about 30 pips of that exact high, and immediately broke 250 pips, and has not been able to recover. That's the other thing that's really interesting about this. Now, much of this will be related to the trade things that are going on. There are going to be a lot of manipulating and butt-kicking and lies and mistruths and disingenuous people, but we'll be able to see what's going on by what the charts are saying. But there's going to be a lot of trade imbalances, more than we've had in the past, because it appears that Mr. Trump doesn't feel like we should be the whipping boy to the whole world on trade. And whether that means much, I'm not totally sure at all. Now, let's just pull this up here. I wanted to show you where we are on a little bit shorter term time frame. Now, this is a tradable chart on the euro, and if you look at this one, this is very, very interesting, because we'll put this up. This was my strategy for today. As you can see, we're in a downtrend. Friday brought a 38% rally in the euro up to the 107.20 level. We've now broken down below that low, which tells us that we most probably have a price objective coming in at the 105.30 level. The 105.30 level will be really important, because you'll see the 1.27 expansion off the January 19th low, 78% contraction off the February 11th low, and a 0.618 retraction off of the February 3rd low. You have three ratios coming in at that point, along with the ABCD. And as Gartley said, you should buy all ABCDs in new bull markets. And whether this is a new bull market or not, we don't know. But it'll have three ratios there, plus an ABCD pattern. And this is exactly the same pattern, folks, that we saw in the gold market at the 1184 level. It got down to 1179.90, but the 1183 at 1184 level will be the exact same chart, exactly like this one. I mean, it just switched the euro, but that was several weeks ago when it was happening on the euro. The thing is, you see these patterns, repeat over and over again. And as you'll notice here, you have this three drive to a top pattern here in the euro. You can see it in gray, ABCD structure ending up at that 108.20 level. That was our long-term price objective on the daily, and that's the way it lined up, and so that's what you're looking at. You're seeing that same type of pattern today, and I believe I'm going to bring this up and take a look at it, because here's your E-mini S&P, and that measures to 1310. We're above that right now. The expansion number on that is 1328, so there's also a possibility of that. Would somebody in the room please check for me? Is the VIX actually up right now? Is that true? I just can't believe that. Wow, that's really surprising. Well, what do I know? I mean, everything surprises me, so it's not too bad. We'll be able to see. Now, but the question is, on these currencies that we're looking at, we're going back to that, if there's secession, in other words, if these people like Britain is getting out of the euro, if France does it, and then Greece and Italy, and one right after another, then it's going to be a house of cards, and it's going to be coming down. But the real problem in the world, folks, is not the stock markets or anything like that. It's the bond market. The bond markets is where the big money is. It's many, many, many times bigger than the stock markets, and that's the debt market, and that's basically it. The VIX is up with the market up strongly today. Boy, that put a pin on that thing, and like they do when you play pin the tail on the donkey. I still have to do the donkey today because that one would really surprise me. Because with the max cap it up, we'll be able to see. 1 second, please. Okay. Now I wanted to go to one other currency that's, well, I imagine they are, but they are behind protection. They certainly have a chance to get it at a good price. Okay, let's take a look here at the British pound. We have the same. These are smaller term time frames. These are 4-hour charts to give you a pretty good idea of where to pick your spots for entry. As you can see, we completed a nice ABCD pattern in the British pound up there at that 127 level, and then we backed off. So we're going to take a break here, but we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we got a caller from Florida. Rich, are you there?
You bet, Larry. How you doing?
I'm good, my friend. Glad to have you on today, buddy.
Yeah, sorry it's been so long. My fault.
No, that's okay. You've been very busy. Listen, we had a crop report on the grains. Could you run through us what we're looking at here? Because we had this lunar eclipse and full moon, and that usually means some pretty significant changes in trend. And just tell us what you're seeing in the grains, if you don't mind.
Well, what I really see, Larry, is the weather. I mean, it got up to like high 90s in Kansas. Minnesota's I'm down here in Naples, but Minnesota's going to be in the 50s all week. I think it's next weekend where it gets down to 49. I mean, this is
Wow.
incredible. The snow cover is next to nothing. Look how many people have been evacuated from that dam in California. And let me tell you, when a dam breaks, it's big trouble. They had a small one years ago break back when I was in college in Rapid City, and you just cannot believe how quickly the water moves, and you better get out of the way or you're toast. And this is a huge dam. That was a little one. This is a huge one that they're talking about in California. So I think it's mostly a weather story. I think the beans are well overbought, but this could be quite a summer. You can go from surpluses to deficits in an awful quick period of time. We've had bumper crops these last several years, and even like cotton. Texas is talking about a 9.5% increase in cotton acres. It's just going to be a very interesting year with lots of volatility. That's what I think. And these algos, create momentum and then cause more momentum, and so you have to use stops, and you catch it and you go with it and run your stops up with the market.
Okay, Rich, someone sent me some information on the Commitment of Traders report. Do you use that very much in your analysis of the markets for grains?
I don't use it a whole lot. Rick uses it quite a bit. Our friend Rick.
Sure.
And the stuff that you received looked kind of interesting, and in fact, he's down in Florida too right now. And that the 10-year, as an example, is another market that's highly strung out as far as Commitment of Traders report goes. But what makes the reason, even if you're a fundamentalist, why you have to be a good technician is because you can know about some fundamentals, but they don't mean anything until they become the market's aware of them and they become a market factor. And that's why, just by watching price, you know everything you need to know about fundamentals.
Yeah, because that's telling you whether there's a sum total of buyers or sellers, because your buyers are more prevalent, the price are going to go higher, and if the sellers are more present, they're going to go lower, correct?
Right. So, I mean, there were years ago, there was times when I would know about an export sale, but until the market knew about it, it wasn't a market factor. And that's why technicals are the key. Believe me, they're the key. Well, you know that. I mean, that's, you know that.
Well, a lot of things I know and a lot of things I see are unbelievable. I just, I look at what's happening to the open interest now in the New York stock or the Dow Jones E-mini, and it keeps going up, or the open interest is dropping and price is going higher, and historically that's a kiss of death of the market. So, I don't see how this can be a new leg up in the market with that situation, because you don't have any new buyers coming in unless they all come in on one day. Maybe today's the day they come in, but it's very interesting to see some of this stuff unfold, for heaven's sakes. It's one big move. Rich, I wanted to ask a question. This is my question. What I see in the bond market is what scares me more than anything else, because the bond market is so much bigger than these other markets, and no one's really paying a whole lot of attention to it. And I just wondered if you see the same thing, if there's a possibility of a debt bubble of some type in here.
There's a massive debt bubble problem in China, but that existed last year, and extend and pretend is what goes on. I think there's a bubble in the U.S., but less so. But China's a controlled economy, so they can get away with whatever for much longer periods of time. I mean, they can make water run uphill. The interest rates, we're going to have 3 new members of the Federal Reserve, and that's going to change the tone quite a bit. But then you've got your budgeting, and if they do tax cuts, how you do your scoring, that's going to really complicate things as interest rates go up. So it's going to be a very interesting time. I think that the stock market's all excited about, and this is my personal opinion, excited about tax cuts and stuff like that. And they'll eventually, they made some reference to it last week, and eventually they'll make some announcements about what they'd hope to get. But politics is about the art of the possible, and they're going to have a challenge in getting whatever they propose. Even if you have the majority in both houses, you're still going to have a challenge because a lot of them are fiscal hawks, and if you're going to have to go to dynamic scoring, and there's going to be plenty of people that don't like that. So that's when the disappointment will probably come in, and that's when we'll probably see a top in the stock market once all this positive information is out there, and that's why you're seeing the money flow that you're seeing in the open interest and stuff like that. That's my.
Okay, we've got a question from one of our listeners about soybeans, and I posted a chart of March soybeans into the room that shows that I'm watching the level of 1073 in March beans. That would take out the 78% level, and that would give it a 70 cents higher to the upside. I don't know where they're trading this morning, but that seems to be the key figure from looking at the Fibonacci analysis. What's your feeling on the beans here? I know we talked a little bit about wheat, but how do you feel about the beans?
Looks to me like they might have put in a top last week, but again, it's all about the weather, and it's not just it's more about the weather in South America for the soybeans. It wasn't quite as wet as they had anticipated last week in South America, and then at the the government will have their ag outlook at the end of February, and that's probably going to show lots of acres. That's usually a bearish kind of couple of days in Washington, D.C. for the ags. But right now it's more a weather-driven thing in South America, and then this summer the weather can rip this thing back and forth. Right now it looks to me like it's kind of running out of gas, wants to roll over and push back down, into the low 9s. We'll come into a break. We're going to have a break here in just a second, and then after we come back from the break, I'd like to talk to you about the corn market a little bit, looking at a little bit longer-term perspective going back over a year. So if you'll stay with us, we'll be back with you after we pay the bills, okay? Sounds good. Okay, folks, we've got Rich Anderson on the line, Capital Management. I'm not sure when the break is coming. I know my little clock on the wall says it should be any second now, and there it is.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. Mondays and Fridays. Catch live trading on the Nadex platform with host Tom and Tommy O'Brien along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're talking with Rich Anderson of Anderson Capital Management. And, Rich, I put a chart of corn in, March corn going back to last June when we had that big run-up to the 453 level. And since September, we've completed a perfect ABCD pattern here on Friday, right into the lunar eclipse and the full moon. We got a little bit higher than we were back on January 23rd. This is a long-term bearish pattern in corn, Rich. I mean, I don't know if it could blow off to the upside from here, but right now it's got everything that tells you that there should be, we're right at the 38% retracement of the high from last June. I mean, would there be a fundamental situation where you can see the corn come down again?
Well, again, we'll have the acreage report in early March. And the bulls think we'll reduce acres by 3 to 4 million. They also thought that last year, Larry, and that it didn't happen. And, of course, if they reduce the corn acres, they'll increase the bean acres. And, of course, if they increase bean acres by 3 or 4 million, that'd be kind of negative to beans. But I think the bigger story is this hot weather right now. We need some forecasts that starts to show some cutback in this heat and some, normal seasonal rains or snow. I mean, we're going to have virtually, after this week, we're going to have hardly any snow cover in the whole United States. So this is setting up to be kind of an interesting deal. I think the February Ag Conference in D.C. will show that, they'll be projecting these increased acres of soybeans and reductions in corn, but they're not likely to be realized, and you'll start to see that in the March report. So I would not be at all surprised to see us, kind of put in a short-term high in here, and we'll probably pull back into the mid-350s. But if the weather stays like this, it could be an awfully wild summer, Larry. Remember that year it was so wet that your basement flooded out in California when I was out there visiting you?
Yeah, I remember that.
And then we had a heck of a summer, and a surplus goes away quickly when you don't have a bumper crop and you actually have a crop failure.
Well, that's the trouble. We've never had back-to-back crop failures since the Depression years, and that's long before we had some of these hybrid seeds and stuff like this and all the technical stuff that they have. But, the world doesn't have a whole lot of food because, they consume it so quickly and they can't store it enough. So any bad years back-to-back would cause such terrible things in the world that you don't even want to think about them.
Rich, right, we've had bumper crops instead.
Yes, we certainly have several years in a row, and yet the prices are, you know, we used to trade corn together, Rich. It was $2.12 a bushel. Remember that? And the range for the month would be 4 cents.
But some of the big Wall Street firms, you know, their asset allocators have, you know, started allocating money back into commodities this year, you know, which they haven't done in years. And you know, that's like, you know, all of a sudden we're going upstream. You know, we're going with the trend. You know, the money flow is coming back in across the board.
Uh-huh.
And that's a huge difference.
We've had someone's asked about the price of copper. I posted the price of copper chart in the room so the folks would take a look at it, and it looks like we're heading up to that $2.95 to $3 a pound level again. Is that what you're feeling on copper?
Well, you know, it's funny. I mentioned that to copper has the PhD in economics, as you know. It kind of broke out on Friday, and I think it's got, you know, I mean, the new administration is doing everything they can to really ramp up the economy, and this looks like a clear breakout last Friday to me, and that would project, you know, way over $3 in my mind, and that's the stimulus that they, you know, take to getting rid of some of these rules. It just, you know, opens the floodgates for business to start ramping things up.
That's for sure. There's no question about that. Rich, one other question that someone's asked us about, and that is sugar. I don't follow sugar too much, but I actually chart it occasionally. And if you'll give me a second here, I'll put it up here to take a look at it, and we will get it here for just a second.
Well, our friend says there's potential fundamentals in sugar that could drive it up into the mid-30s. I don't even trade it personally. But, you know, it had a big move from February of last year into September. It's had a nice pullback, and it tends to, you know, light it up in February. And you know, if the fundamentals are, there was crop problems in South America last year in sugar. If those problems reappear again this year, that's what will make this next leg. Our buddy thinks that you could have another leg like we had last year.
Well, it's certainly possible. I'm watching this level of 19 cents a pound myself. I don't trade it, but someone's asked me to keep an eye on it because there should be some strong support there around that 19.50 to 19 something. Rich, you remember when we first started trading sugar, it was 6 cents a pound. It went to $66 a pound back in 1968. That was at that time, that had been the biggest bull market in commodities that we had ever had, as I recall. That's my memory going, and sometimes it doesn't work as I would like it to, but that made it pretty crazy for sure. We've got a couple more minutes to go through here. How about the meat markets? What are you seeing in the cattle market? We've had a little bit of a sell-off in cattle, and to me, it looks like we've got a shot for cattle to come down here about another 3 or 4 cents, where you'd have a pretty good spot, or actually 5 cents, and a pretty good spot to be a buyer of cattle. What's your feeling there?
I would agree with that. I would, you know, we're in a downtrend right now, 3-4 cents lower. I'd have some interest. I think they'd have more value for a retest of maybe that 16, 17 level. The nearbys are going to, you know, demand premium. Weights are coming down. One of my friends thinks we could be 20 pounds ahead under a year ago. We're going to need that because we're going to have more numbers. And if our weights stay the same as last year, then we're just going to get buried in meat. The problem is that over the last 5-6 years, we've closed some of the packing plants, so our kill capacity isn't what it used to be. And once the packers have control, prices get pretty cheap. You know, they take advantage, and that could happen into late April into June. But nearby, you know, that's the front months where I'd be staying in. Right now, you've got the February is a $3.50 premium. I think there's probably going to be plenty of cattle around by April, so you got to have that 3-4 cent break before you have any interest. I'd probably can find my interest down in that 109 area, at the minimum 110.
Okay. What's your feeling on crude oil? We've got to wrap it up here pretty soon, but how do you feel about the crude oil?
Well, we're starting to, the swing producers of the shale. I just think it's a trading range between 45 and 55, 65 next.
All right, my friend. Thanks for calling in, Rich. I appreciate it. Folks, I have to have a conference call, so I'm not able to finish the last part of the show. We'll catch up tomorrow. May God bless.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.